Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A new low for September, but also an indecisive spinning top pattern, right on the same support that held up the drop in August and also back in March. And that's the 38.2% Fibonacci on the June 2020 to January 2021 move at 116.94, and also the neckline, currently 116.89, of the August to September 2020 head and shoulders pattern. Now admittedly, this time it was a little higher than in August, yet the origin of support was still the same. Thus it seems the current action since early July is to be held within a wide range from the overhead lesser Fibonacci levels at 118.87 and 118.97, and then below the 38.2% Fibonacci line and the neckline. Now so far today, initially not that much, though a seeming reluctance to try lower right now, possibly a bullish engulfing pattern. But there's a reluctance to try below the much lower than yesterday's close. Further down, we don't have that much in the way of support until August low at 116.62, and that is dubious. You'd have to look at the November 2020 low at 116.02 to start to see some support. Cable, a third bearish black crow yesterday. That was also a bearish black Mariboso. The market dropped back down below the broken upper tine, currently 137.64 of the early June to late July bearish shift pitchfork. Now I've kept this broken pitchfork on the daily chart as I suspect it may still have a role to play. However, I have some severe doubts about it, and to be honest I would retire it in a heartbeat if I could find a more satisfactory pattern. The drop yesterday interestingly halted at the 61.8% Fibonacci of the whole of the 2016 move at 136.54. Now this lesser Fibonacci line had previously been excellent support back at the start of the year and again in March and April. It had still performed, though a little raggedly, in July and August, so it is one to watch. Further below we have the limited supports at 136 and 135.70. Overall we still have a chance that the whole of the 2021 action may be a double top pattern, Adam and Eve type, though it is becoming more obscure and obtuse as a pattern the more we stay up at these levels. So far today, an early dip, but then the beginnings of a small reactionary move back up, however limited it might be. Euro sterling. After nearly a week and a half of indecisive spinning tops, we finally had a move yesterday of some note. A bullish white soldier that punched up and closed over the flatlining short medium moving average, currently at 85.45, the upper tine of the July to September bearish Andrews pitchfork, currently 85.58, and a declining medium moving average, currently 85.69. Indeed, it was only the highs from early September in the 8600 area, coincident now with the upper tine of the bearish shift pitchfork, currently 85.97, for the same move as the Andrews, that capped the rise. Now, I'd previously highlighted a large pattern going on here. I said there was then still an argument to look at the action since late May as a possible, if uncommon, right-angled broadening formation, with the April 2020 low at 86.69 as the flat overhead baseline and the lower bear channel line, currently 83.99, as a descending trend line. Now this is still true, though I have to say aesthetically it looks a bit disjointed. So far today, a pullback down with what looks like to be a possible bearish dark cloud cover pattern type that has managed to push below the medium moving average, but as yet not below the broken upper tine of the Andrews pitchfork, though we are staying above both those right now. US dollar against the Indian rupee. Gapping higher since filled in bearish black crow. Prices opened higher over the 50% Fibonacci line of September 2019 to April 2020 move at 73.68, which had capped late last week's efforts higher. Yet, whilst the move up did open over the flatlining medium moving average, currently 73.79, it failed to punch up over the 50% Fibonacci line for the 2020 move at 73.84. In the end, prices closed back down below both the 50% Fibonacci lines and just above the flatlining long moving average, currently at 73.57. However, with all that, there was a bigger action being constructed. Yesterday was day two in a 2-day meeting lines pattern. Now, this particular order of meeting lines pattern is traditionally seen as a bearish reversal pattern. However, data indicates that it is marginally seen as more of a bullish continuation pattern. It will be interesting to see if the market follows tradition or the data. So far today, a steady open and a test up to the 50% Fibonacci line at 73.68 and down to the flatlining long moving average before ending up more or less around about where we started. US dollar against the Brazilian real. A third bullish white soldier yesterday and a suitable follow-on higher to the previous 2 days bullish separating lines pattern. The market rose from an initial lower start to push up through the flatlining long moving average, currently at 532.42, and the middle time of the recent late July to late August bullish shift pitchfork, currently at 535.85, only to be halted by the overhead combination of the 50% Fibonacci lines of the 2020 move at 538.46 and the May to June move as well at 539.28. Now, prices eventually settled on the long moving average at the close. Now, the recent bullish shift pitchfork continues to perform well here, especially in the middle time. This is the gentle bullish incentive that is evident since the end of August. US dollar against the Mexican peso. A third bullish white soldier yesterday. This time it was a bullish opening white Mariposa based on the flatlining short medium moving average, currently at 20.0020, and just above the also flatlining medium moving average, currently 19.9848. The move up, interestingly, punched clear through and closed over the additionally flatlining long moving average, currently at 20.1034, but shied away from testing the 2021 downtrend, currently at 20.2639. Now, overall, we still have the June to date action as a possible descending triangle pattern, with the upper trend line currently 20.3183 and the baseline in the 19.800 area. However, please do not forget the main device used to direct this market lower, and also its main attractor, and that's the influential gently declining neckline of the February to March head and shoulder stop, currently at 19.6810. So far today, a lower open and a move back below the long moving average, though not as far as the short medium moving average, and looking like a bearish harami right now. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investors Services International Limited. And here comes the final bit.